Hello and welcome to Public Key, the new podcast from Chainalysis. This is your host, Ian Andrews. This week's episode was recorded live from our Washington, D.C. studio where I was joined by Aidan Larkin, the founder and CEO of Asset Reality. Asset Reality is also a Chainalysis partner. Aidan has years of experience in the asset realization business, the process of government dealing with seized criminal property. He started his company after getting a phone call from a client asking for help in auctioning off Bitcoin. Aidan saw a gap in technology and know-how inside of government agencies dealing with cryptocurrency seizures, and he knew he could help. And after the episode, if you want to learn more about emerging financial crime typologies, head over to the show notes and grab a copy of our mid-year crypto crime report. It includes all the latest stats and trends for the first 6 months of 2022. On today's episode, I'm joined by my friend Aidan Larkin, CEO of Asset Reality. Aidan, welcome to the podcast.
Thanks very much for having me.
Welcome to the States as well. We're actually getting to do this in person, live in the Chainalysis DC office, an exciting moment in the podcast history.
Yeah, it's not, I'm so used to living remotely that it's actually great to be back out on the road and seeing people again. So I think that, I think the last time we spoke was Links in NYC.
That's right.
So, yeah. And thank you to you and Joe for the shout out on the last episode of the second last episode of Public Key.
That's right. You know, Joe and I had such a fun discussion talking about his past experiences in law enforcement. And after we stopped recording, we said, we've got to get Aidan and the Asset Reality team on the podcast. So we made it happen sooner than I expected. Took advantage of your trip here to DC. Maybe start the podcast. I'd love to hear your origin story. Like, how did you find yourself in this crazy world of crypto? What was your first experience in the space?
So for me, it started off, I was working as an asset manager. So basically, if the government seized Lamborghinis and yachts and watches, I was the guy that was managing those seizures. And I remember getting a call when I was sitting in an airport about to fly home, saying, we just had a Bitcoin seizure. You're the contractor, so you kind of need to deal with this from a police force in the south of England. And I was like, I had to admit that I was like, well, I've heard of Bitcoin, but I don't really know how on earth we would even start the process of seizing it, recovering it, managing it. And that sort of set us on this journey of just trying to sort of demystify the whole topic, and from an asset recovery perspective, think of it as it's just another asset. Ultimately, it's like if you don't need to be a gemologist to seize a diamond. You just need to know, what is it? Can I insure it? And that took us on a really interesting sort of journey dealing with, in my old company, Wilson's Auctions. I mean, you had this nearly 100-year-old auction house that was dealing with all these wonderful assets, and all of a sudden we're now dealing with digital assets. So that was a really fun experience, and we got to meet a lot of really interesting people. And we did then, what we found out was the first ever private sector management of seized crypto in the world. And then it led me to have the sort of cliched claim to fame that, like all proceeds of crime assets, the vast majority of them end up getting sold. So I was the actual auctioneer that on the auction block sold Bitcoin. I think
that was the first time it had ever been done.
That was the first time in the world that someone has auctioned Bitcoin.
What year was this?
2018, 2019.
Okay, so...
Well, I know that the market price for Bitcoin was $3,000 a Bitcoin. That's what we had to reach for one Bitcoin. And I wish I'd have bought it all at auction, actually, but I wasn't allowed to. But we did that, and that's what got me introduced to Jonathan and the team at Chainalysis, because ultimately, you guys were the tool that was finding this crypto, and that's what led to the sort of the creation of Asset Reality, because we knew that governments had problems with all types of assets and all types of complex assets. And myself, Hugo, Nick, my co-founders, we sort of sat down and said, well, actually, if this is not a UK problem, it is a global problem. And if companies like Chainalysis are giving people the tools to find digital assets, well then, if you're the metal detectors, who's the picks and shovels? Who is actually taking these assets and connecting them with a custody solution? Who's managing the cases? We all know what to do if someone seizes a yacht, or someone seizes a car or a racehorse.
Well, actually, I don't know. Yeah, this is a new territory for me. So, a criminal gets arrested. In the process of that arrest, presumably, the law enforcement finds cash, weapons, drugs, but also cars, houses, boats.
The trappings of wealth. Yeah.
What happens to all that stuff in a normal asset seizure?
So in a normal case, they are traditionally around the world, it's pretty sort of unanimous that those types of assets are either sort of exhibits of your illicit wealth.
Yep.
So they're officially they're money laundering exhibits, because you can show a court this person has no income, but they bought a $250,000 Lamborghini. So even if you're claiming that you're not the criminal and they can't pin that on you, you still haven't got the money legitimately to earn that asset. So traditionally those assets are seized. And also if you're scamming people and you have victims, I mean, that asset being seized and that asset being sold is the money that will go back to the victims of the fraud. So sometimes it's the state and society that gets the money back, and sometimes it's individual victims. But that's the sort of asset recovery sector in a nutshell.
Yeah.
It is identifying how people have spent ill-gotten gains, grabbing those assets and getting those assets back to the rightful owner. But different jurisdictions around the world have different lengths of time, and it's not uncommon that these cases can take 5, 6, 7 years to go through court with appeals and all of the usual things that go on in criminal and civil cases. Even things like bankruptcies, probate. There's all of these cases where this industry exists that people have to manage assets. And we just so happen to be doing that, and then get involved in digital assets as just a new asset category.
And I would assume that there's all sorts of issues of loss prevention, right? Like if you seize a fancy car or a piece of art or a house, those aren't maintenance-free assets. They need to be maintained. You can't do anything with it, dispose of it, sell it until the case is resolved. Whether it's a bankruptcy or a criminal proceeding, like you said, that could be years.
Yeah, that's a good point.
And so you've got to maintain the car. Somebody's got to clean the house and make sure there's not a leak in the roof. The artwork has to be protected from sunlight. Like, it can't just sit in a box in an evidence locker in a police station.
And that's but ironically, it does in many cases. Unfortunately, in former life, I worked in a criminal investigation directorate as a tax inspector. And today I still lecture on asset recovery, and I work with the United Nations. And it's something, sadly, all around the world, governments struggle with asset recovery cases. Yeah. It's very common that an expensive car gets seized. It goes through lots of years of litigation. And like you say, all of the maintenance in the world doesn't stop the steady march of time.
Right.
And a Lamborghini that was a year old versus a Lamborghini that was 5 years old and has sat in a field is not going to be the same car it was when it was seized.
Yeah.
And that's just bad news all around, because if you're the victim of the crime and that's your pot that you get compensated out of, you've lost 90% of the value. If the person's acquitted and not guilty, even worse then, they get the car back, and sometimes they'll sue the state and the government has to make them whole. So all around the world, asset recovery was a big challenge before crypto came in.
Yeah.
And I think that everyone thought, oh my God, a bad problem is just going to get so much worse. Like we see this in hyperfocus today with the sanctions related to the war in Ukraine, where you see all of these seizures taking place with these mega yachts and super yachts. I mean, some of those yachts, our COO, TJ Abernethy, who's just joined us from the US Marshals, I mean, TJ's last action in the US government was to seize the Amadea, the vessel from Fiji. And I mean, that vessel sitting still, you can Google this, a vessel of that size, the maintenance cost alone, that could cost nearly $1 million a month sitting still. So that for me is a complex asset. When you actually look at crypto assets in an asset recovery sense, they're actually the easiest, most scalable and easy to deal with asset in the world if you know what you're doing with it, because it doesn't rust. And I know we're going to touch on volatility and touch on market prices. I can see you're primed to say it, but it doesn't rust. If someone in the IRS or in the FBI says we want to seize $1 billion of crypto, I mean, no one in the asset reality office is going to bat an eyelid. It's just, great, let's get a QR code and let's pick the custodian you want to work with and get that asset transferred. Whereas if you say, I want to seize a pedigree racehorse, or I want to seize a large yacht, then people will start to panic and think, my God, there's so much liability associated with this. What are we going to do? How are we going to store it? So crypto for us is a huge area that we can really turn the tide in asset recovery. And we're seeing these results coming in now, where governments that are using analytic tools that are finding illicit crypto, like the rewards are there. It's like we're sitting on oil under our feet that's not being discovered. And we're seeing some incredible results, but it's all about the art of the possible. It sounds scary, it sounds complicated, and one of our missions at Asset Reality is to just simplify the process, work with partners and be able to show people that actually it's not as complicated as it looks. The asset recovery piece, and I want to be sure that I'm not dumbing down a really complex topic. The investigations, the analytics, all of that is incredibly complex. But in terms of the recovery, management, and realization, I think we've got the easiest job.
I can definitely buy into what you're saying. Like I'm imagining, trying to just move a few $1,000,000 worth of cash or gold or artwork. The complexity there just to transport it, super high. Like you need big trucks, whereas transporting cryptocurrency,
like transfer billions in seconds.
Exactly. No, there's no physical weight to the digital asset for sure. But when we had Joe on the podcast, he was kind of alluding to some of the challenges here. I think when you lack the technical knowledge and sophistication, he brought up a case that had never even occurred to me. And now I've sort of parroted this story, so I'll do it again here live, which is you've arrested a suspect. You come to understand that they have cryptocurrency in their possession. Maybe a digital wallet on their phone, or you find a physical hardware wallet, and you look at that wallet. You maybe go on a block explorer like Etherscan. You can see the balance in the wallet. You're like, great, record that into evidence, put it in the evidence ledger, in a Ziploc bag. It gets stored in a secure box. Meanwhile, the suspect bonds themselves out or is released from custody. They have the recovery phase on the wallet and they transfer the funds. And that device or asset that you have sitting in evidence,
you don't have
it's gone.
Yeah,
you don't have it.
We have seen this happen firsthand. We have seen literally occasions where the police are kicking in a door and someone looks like they're sending a text message and they're not. They're sending their seed word to an accomplice, deleting the message, and the minute they go in the back of the police truck, someone somewhere, and that's a huge education piece where we're trying to do at Asset Reality. You don't know what you don't know, and these things are easy if you know how. I mean, it's easy to sort of repair a car if you're mechanically minded and you're trained and you know what you're doing. But to me, I look at it and I just see a bunch of wires and pipes and metal. I have no idea. So there's certain things you know, there's certain things you don't know. And I think that's the big trick in all of this. It's about educating people to the risks and the pitfalls. I always sort of use the same example. I need to get some better examples. I always use the example of sort of crypto asset recovery is like a tightrope. Yeah. Really clear what you have to do. Yeah. Super simple, A to B. But if you get it wrong, that's where it's catastrophic. And we see this, and we've seen countless examples where where people have, and I suppose it's no different than the advent of computers and people understanding digital forensics. How many people seized the laptop from a criminal that was logged in and they closed the laptop? I didn't realize by closing it, they've just encrypted it. And their digital forensics guys are just screaming in the background going, why did you do that? Why did you lock the phone? Attach a charger to it, go into the settings, turn off the don't let the screen auto lock. Yeah. So it's just passing on that really simple knowledge. And again, it's not to make fun of someone that's got it wrong in the past. Because again, if you don't know, you don't know. You think you're doing the right thing. We've seen people shut down devices, put them in Faraday bags, like you say, thinking they're protecting the Bitcoin. And if you don't understand the mechanics of how the technology works, then you're into all sorts of trouble. And I think that, back to the tightrope analogy, if you have a cash seizure and you turn up at a criminal's warehouse and something goes wrong and you're towing all the cash out and some of the cash falls into the sea, well, no one really knows what you started off with and no one knows how much is floated away. But crypto is the immutable gift that keeps on giving. So what we see time and time again is that if you make a mistake in crypto asset recovery, the world and Twitter will remind you, and all of the analytic companies will quickly go onto LinkedIn and go, really? Did you just see what happened? And sometimes that can push people too far because that makes people sort of almost paralyzed by fear. And I think that's why there's so many government agencies right now and enforcement agencies and litigation lawyers and people who are perfectly capable of getting involved in asset recovery, involving crypto, are not dipping their toe because it just seems like a scary bridge too far. And that's our job, is to really sort of demystify it and say that actually the tools exist, the results speak for themselves. And actually, this is easier than regular asset recovery. If we really want to move the needle, we need to double down on crypto asset recovery. We've saw it through the pandemic. We saw the explosion of online transactions, online shopping, of how people live a more cyber and digital life. You compare that against all the cost of living and looming recession, and there's just this digital bounty now and this digital footprint that it simply wasn't forecasted a couple of years ago. And we're seeing this in the crypto seizure results around the world now. They're not seizing millions, they're seizing billions in value.
You gave me some stats comparing asset recovery and crypto asset recovery in terms of scale before we started recording. That blew my mind. I mean, share those numbers again.
It's something that people sort of, I'm a big fan of sort of setting sort of perspective and context. My wife's actually writing a book on perspective and context, so it's a conversation we constantly talk about. Is talking about this sort of setting the context against something you know. And when we talk about the performance in crypto asset recovery, let's pick the US. What does the US do in terms of criminal asset forfeiture for all of the forces. And these are all publicly available statistics. So I think in 2020 and 2021, it was in and around $2.5 billion. So that was all of the real estate, all of the art, all the typical sort of the US Marshals, let's say the US Marshals deal with the majority of sort of seized assets for lots of different government agencies. So they're a good benchmark. And say, $2 to $3 billion is seized every year and forfeited every year. So phenomenal amount of money. But then you compare that to crypto. The IRS criminal investigation team, based on their publicly available information, based on their LinkedIn posts, they're probably crossed $7 billion already. And this isn't a fluke, this isn't a one-off in one particular region. We've seen reported seizures of crypto assets in the UK. One police force has seized more in crypto asset than 43 police forces combined for all categories of assets. So this is the equivalent of finding gold for the first time, finding oil for the first time, where we have this incredibly highly valuable asset category that can generate so much value. You think that money is the money that goes back into countries and pays for hospitals. That's the thing that will bring down our tax bills. This is the lifeblood of any government and any society. This is the money that will compensate victims of crime.
That's where I was going to go with this, right? I don't want people to walk away and go, oh, well, this is the government seizing assets to go back to the government. There are victims involved in all of these crimes. These are people who had NFTs stolen. They were, led down a path of investing in a scheme that they thought was legitimate, and it turned out to be fake. Victims of non-cryptocurrency crime, where the assets have been turned into cryptocurrency in an attempt to evade law enforcement or launder the funds, right? So there's real people on the other side of this who are benefiting when law enforcement's successful in seizure and realization.
You're exactly right. Judges will make orders all around the world where if you have something like a Ponzi scheme where hundreds of families have been defrauded thinking they were investing in something that was genuinely a savings activity that would make them more money or safeguard their sort of their children's financial futures, and it turns out it's just a big Ponzi scheme. Now, it was actually your reports that show that overwhelmingly, crime involving crypto is mostly Ponzi schemes. It's just a new asset category. It's still the same old-fashioned crimes. When the gold prices went up, fraudsters waved gold in everyone's faces and said invest in gold. When crypto prices go up, they wave in crypto. Now NFTs were going up, they wave crypto in everyone's face. It's a new vehicle for scams. And I think that people forget that even the term asset recovery, it's about getting something back. And yes, there's times that it goes back to society in general, but what we see in many court cases around the world is in those Ponzi schemes, for example, victims are actually identified, individual losses are quantified. And in large insolvency cases, when you've got businesses that have been shut down for illegal trading or sort of financial impropriety, there's an actual creditor there who is watching the asset recovery activity, knowing, I've seen it firsthand, I've been the auctioneer selling assets when someone is in the front row, knowing that what I raise in the auction directly goes back to them, because it's actually called a compensation order in court that is granted. So I think that's why it's so important, and we're so enthusiastic about the fact that we've seen the results in a wobbly, disparate system. So if we can work with other players in the sector to say, well, let's make crypto asset recovery as fluid and as effective and democratize access to as much as we can, so that it's not a specialist asset recovery tool used by niche cyber departments. We want to be in a position, Snoop Dogg has an NFT range, Mike Tyson has an NFT range. So who are you going to be stopping at the side of a road? Someone who's a huge basketball fan. The regular people are buying digital assets. So when regular people are involved and caught up in criminality, they don't have to be crypto fraudsters to own an NFT.
That's right.
Regular drug dealers buy Louis Vuitton bags. Does that mean Louis Vuitton's bad and Louis Vuitton by association is guilty? Someone buying Bitcoin who is a fraudster has nothing to do necessarily that it's crypto crime. And I think people sometimes sort of blur the two things. So from our point of view, it's just that we just see this as a wonderful land grab opportunity for society to actually get money back. Now, and we talk about the mission behind all of this, regular asset recovery. I've been in asset recovery for 16 years. The stats are harrowing. It's less than, I think 1% is the global statistic. Europol have covered this, Deloitte have covered this recently. On average, 1% to 2% is the total amount recovered out of all of the estimated available criminal proceeds that is out there. You imagine any other statistic that we said 2% is as good as we can do. Now, there will obviously be bubbles around the world that sort of sort of change that sort of trend line a bit, but on average, that's what the stats show. Trillions are laundered, billions are recovered. So there is this disparity, but we see that the needle is moving with crypto. So I think that that's why, and we're seeing I hate the phrase that when politicians always say about crime shouldn't pay, and we're showing people that crime doesn't pay. Yes, it does. It pays handsomely. This is why we call the company Asset Reality, because we just want to be honest about things. Like, this is the state of the nation that we're in right now. Asset recovery is broken. Crypto has the blueprint that we can demonstrate to people that if we can apply the same level of public and private sector collaboration that we see in crypto right now. I mean, government agencies didn't build blockchain analytic tools. Government agencies didn't build custody platforms. So the private sector has come together, created all these collaborative tools, and we're seeing the results of it. What I'm hoping is that when we get finished with crypto asset recovery, I can start to turn to the 10-year-old cars that are seized, the boats, the planes. But sort of right now,
go back to your roots.
Almost
the harder problem.
It was literally, when we started, we came out of the Techstars accelerator, sort of the same as Chainalysis. We're following in those footsteps. And when we literally started the company, COVID started. So we had no other option. It was like police weren't doing warrants, they weren't going in. We had this full intention of doing all of the regular assets and crypto on the side. And then it just became our sole focus during the lockdown. And if anything, it was probably quite fortunate for us in terms of forcing us to build a remote company. I mean, still to this day, nearly 2 years in, over 25 guys and girls in the team have never been in the same room. The 3 co-founders of the company still have not been in the same room together.
That's amazing.
So I think it's forced us to work in an entirely different way. But to be quite honest, it matches and mimics how crypto is structured, and the decentralized nature of that allows us to not try and apply old methods. It allows us to sort of try and approach things in a more flexible way.
So your enthusiasm for the sector is clear. I love this story about how you get that phone call, hey, we've just seized some Bitcoin. What do we do with it? And then you had to go figure it out. So you founded the company. Maybe tell us a little bit about, since that phone call back in 2018, like, what does the company do now? You've got quite a few interesting customers.
Yeah, from us, like I say, the mission was always around asset recovery. And it was actually a conversation with co-founder Jonathan Levin. We spoke to Jonathan and said, look, we know that crypto asset recovery is a big thing. We know that people are using the analytic tools and they're finding crypto and they're having a major problem with the management of the asset and actually dealing with it and converting that back into cash. And we know that's going to be a big problem. We know that the case management side of things is going to be a big issue because people are currently using Excel spreadsheets to reconcile a slow-moving asset recovery sector. Now, where is the boat? It was in the same place that you left it sort of 3 months ago. And that sector wasn't very joined up, and the contractors, and it was all just emails. But we knew that the crypto sector was going to be very fast-moving and digital asset. The possibilities were really interesting and really scalable. So actually, when we, the first bit of work we ever did at Asset Reality was actually a consultancy project for Chainalysis to say, let's look at this sector and let's look and see what playbook we could come up with. And it was actually credit to Jonathan and one other person had said, why don't you just go to Techstars, the same accelerator that launched you guys? So we went there and went, well, you accepted these guys 6 years ago and they did all right. And what if we come behind them in their wake? And at this point, we were lucky because there were so many blockchain analytic companies doing really good work in the space. And it was just that, what do you do when you find it? Our North Star was always around sort of improving asset recovery for everybody and getting more money back into victims and the pot for society. But as a company, we've naturally just progressed now into effectively developing a platform that allows government agencies to manage their crypto assets. I mean, billions of dollars across thousands of asset classes are being managed on Excel spreadsheets. Government auditors don't like that.
Mind-blowing and actually not that surprising. At the same time, right?
To this day, I've still spent longer in the public sector than in the private sector, so I'm very, very sympathetic. There is no Salesforce or HubSpot. You can't just go and download something on a government computer because it's a better tool. You're simply not allowed to. Yeah. So from our point of view, it was how can we develop something that's low code, easy to integrate, that will enable people to be able to manage and basically replace Excel in that process. Yeah. And when we were doing that and we were looking at this as a platform development, it was just a chance meeting at one of the crypto conferences that we bumped into the guys from Consensus and MetaMask. And we sort of got from them a real sort of passion that they wanted to do things better and have a better user journey. Because what we were seeing was we all talk about mainstream adoption and we all talk about doing better as a sector to make people feel safer in crypto. And everyone talks about making crypto safer. Well, how do you actually do that? And again, I'm a big fan of perspective and context. Well, why do I feel safer when I shop online? Is it because I understand merchant services and international banking? Haven't a clue. But I understand that if it goes wrong, Visa will give me my money back. Right. So I just trust the infrastructure. So we started to talk to crypto companies saying that if you can do something and make it feel more like a TradFi situation, like my mum and dad will shop online because they know there's antivirus. And they know that the computer...
get my grandmother to shop on Amazon. She's like, what can I buy the kids for Christmas? And I send her links on Amazon. She wants to call Amazon to order something. What I did, but I agree generally.
I got my in-laws onto you telling Alexa what to do. And now they feel like they have a personal servant who does it for them. So they don't even know they're using Amazon, but they are by Alexa. But for us, it was that sort of, it was the sort of baby steps approach and thinking that actually, if someone like MetaMask and Consensus can take the lead and can say, actually, we know that there's a better way to manage user journeys. And remember, asset recovery is a civil litigation process in many cases. If you lose your crypto assets because you were sadly socially engineered and you gave up your seed word, I hate to say it, but that's not the fault of the platform or the protocol. I mean, you've been socially engineered. A crook has went out of their way to trick you, and people are angry and people want their assets back. And sometimes the hardest part of our job is having to explain to people, you'll still have to go through the traditional legal mechanisms. You'll have to get a forensic report. You'll have to get a lawyer. You'll have to get a freezing order. And those things are very expensive. And the sad reality is fraudsters know that. So with crypto, they will not target someone for $1 million. They'll target 1,000 people for $1,000. And they know that if they can hoover up lots of small amounts, those individuals are not going to pay. And start legal action. And that's why we're trying to work with the industry. And we are obviously involved with yourselves in the Digital Asset Task Force, for example, looking at the sector to say, how could we get to a promised land of like Visa chargeback, but for crypto? How could we get to peer-to-peer crypto insurance, for example? How do we get to all of these places? And I mean, before the iPhone, if you'd have said to someone mobile phone insurance, it was an expensive thing and no one wanted to pay for it. But now we understand that actually, because Apple have an iCloud lock, then the insurable risk comes down for the underwriters. And so we sort of look at what's happening in the old sector and how do we apply it and how can we be the company that helps build the infrastructure. And the biggest way we're doing that right now is by managing the user journey, kind of like crypto customer service. So Web3 protocols and companies in DeFi, we will be their partner, that if you're a victim of fraud, you come to us, we use the analytic tools, and we'll try and help you on that journey to recovery, but also by being very realistic about the fact that there's no magic solution to this. Yeah. You might be tracking a fraudster that has a company set up in an offshore jurisdiction. You're going to need a lawyer, an insolvency practitioner might have to get involved. But if we can at least flag the scam, if we can put it back into the blockchain analytics community, we might be able to stop the next person coming through falling victim to the same scam. And then it means that the sector can come together and say, wouldn't it be amazing if we had preventative screening tools on outbound transactions? What if we build up such a large data set that in the same way, if you set up a new payee on your bank, you can see, are you sure you're sending this money to Ian? Because this doesn't look like Ian. This looks like a company that's overseas. Wouldn't it be amazing if you, as a peer-to-peer person, you could just check that address before it went out?
Absolutely. I mean, these are the things that I think...
It's all possible. We just need to get there.
My prediction at the end of last year was that 2022 would be the year of investment going into wallets. And we've sort of seen this, right? A number of exchanges...
Binance buying Trust Wallet. And
Exactly. A number of exchanges launched branded wallet products. Crypto.com was one. Binance was one. Coinbase just launched theirs. We've seen a bunch of independent companies launching, both open source and venture-backed wallet initiatives. And I think they're all chasing around the same problem, which is the user experience is far from foolproof, right? It's very easy to approve a smart contract spend. A colleague of ours here actually fell in this trap where he approved something in his MetaMask that he thought was totally innocuous, and it cost him about an ETH. So a relatively small loss. He can sustain it. But that's a very sophisticated user. And so I project that back onto my non-Amazon purchasing grandparents. We're a wide gap from there. But that was why I was so excited about this MetaMask relationship that you guys have developed. Right?
From our point of view, it is really exciting. And there's other companies that we work with as well that we're not at liberty to name, that it's the same thing. It's about improving the user journey.
That's right.
Because I think that the more people feel safe in this sector, the better it's going to be for everybody involved. And I think that the industry could do more to help itself. There's a lot of the big exchanges out there that I think that, why do we have Amex and Visa chargeback? That's an operating cost for those merchants. should we see something like that? Should there be a middle ground? I mean, if I'm socially engineered, I have Capital One will cover if I have identity theft.
Yeah.
If someone uses in a different continent, buys an iPad with my credit card tomorrow, I don't have a whole argument and a fight with them. Whereas if you look at anybody who's been a victim of any crypto-related fraud, what their experience has been like with billion-dollar US registered crypto companies, you're sort of thinking they could do better.
Yeah.
And I think that from our point of view, we'd rather work with people than against people. And we would rather, but we also know that we're very firmly sort of rooting for the victim. Some of the companies are doing exceptional. I think it's wonderful that MetaMask and others have sort of taken that lead to say, well, look, let's at least start sowing the seeds of a better user journey. Because the more people can say that, yeah, I had a near miss or something went wrong, but it was quickly resolved. I also know it was my fault and I was kind of social engineered. And I mean, more education, more awareness, that's where we'll see these things starting to sort of move away. And then if that's also sort of contrasted by more aggressive recovery action against the really bad actors, the really, really bad illicit addresses, if we're seeing a combination of those, I think that'll do more for mainstream adoption than a crypto rally will do. If people just feel safer with crypto, that'll give us the rewards that we all want in the sector in terms of an uplift of users than the next latest sort of bull and bear market.
Totally agree. I think it's also interesting your company is working not just with the technology providers, but you're also doing some pretty extensive work with governments around the world. Like, talk a little bit about the work Asset Reality is doing with the Seychelles government.
Yeah, so Seychelles and a lot of the traditional sort of offshore jurisdictions as well, they're in a really unique position. Because if you imagine, as Asset Reality, we're coming to the market as a fintech startup. We have this platform that can manage crypto seizures, and it all sounds great. But if you're starting at a 0 point where you don't have huge funded law enforcement teams, you don't have blockchain analytic tools, you don't have investigation tools, and then you've also got this really unique sort of paradox where you need the GDP, you need to be open for business, you need the economic opportunities that blockchain companies bring, but you also don't want to be someone else's cautionary tale and have lots of crypto activity in your jurisdiction and then get criticized by FATF or go on the dreaded grey list or some sort of negative evaluation because you're not doing enough. So I think that because we have the experience in our team of being ex-law enforcement, of helping countries with their mutual evaluation assessments, we get a really good read on what's possible. And I think people like our pragmatism that we're not going to go into some jurisdiction that has a grand team of 10 people in their FIU and say, you must do all of these extraordinary things. We would rather sit with the regulator in between and say, look, what's realistic and practical that you can do? And what are the things that actually you're not doing as good as you could? And there's tools out there that can do that for you. Yeah. So we sort of sit in the middle, and Seychelles is a good example. It's in the public domain where they've been incredibly sort of open with us saying that, okay, we've got all this crypto activity on the island, on the jurisdiction. We want good crypto companies to be here. We want to stop bad actors, taking advantage. And that's a fantastic position to be in. I'm from the UK. The UK is the global money laundering hub in the world and has all the ability to shut it down. And the powers that be don't. And I think I always find this hilarious that I get to travel all around the world as a UNODC consultant, and I get to talk to people about what they should do in their jurisdiction being from the UK. Whereas frankly, we need all of the consultants to come to the UK. Oliver Billow's Butler to the World is one of the best books you'll ever read on the UK's position in money laundering and enabling money laundering. So I think that countries like Seychelles, proactively saying, well, what can we do to improve this? And again, let's be very clear. Go back to the very first conversation we had. There is billions of dollars going through these jurisdictions. Yeah. That money could be forfeited if it's illicit. And that money could be building hospitals, could be building infrastructure, could be building roads. So I think now we're seeing some of the smallest jurisdictions in the world popping up. One of my next projects is in Cook Islands and Palau, because Palau was the home of the famous Rai coins, which sort of cryptocurrency is constantly sort of compared to. And again, if you want to set up a crypto company in an offshore jurisdiction, you're doing it from a laptop. You don't even have to go. So it doesn't matter if it's a rock in the middle of the ocean somewhere in the Pacific. That could be the hub of the next multi-billion-dollar crypto exchange. So I'm very empathetic to countries that are trying to get the balance right, but there's been enough examples of countries that haven't done enough. And I think that's why we're being deployed deployed around the world now, because people know that we have a playbook that we can roll out, and we can say, this is how you become compliant. This is how you generate asset recovery returns that is good for the country. It creates a good virtuous cycle that gets money in, that funds more law enforcement, funds better compensation for victims. And then it also helps the reputation of crypto as a whole, and helps the sector because it removes a lot of the hiding places for the bad actors. But it's like we talked about before this podcast, let's not kid ourselves in the sense of the scale of the issue. No, crypto is not the issue. Current estimate is that $2 trillion is laundered in fiat every single year. The art section and luxury goods market have been named on every money laundering assessment around the world, and has been for the last decade. And sanctions evasions were alive and well in the art industry long before crypto came along. So I think that I'm not going to sit here and say asset reality is a panacea and we're going to fix crypto, we're going to fix asset recovery. But I think with crypto, all of the tools are there that we can genuinely make a real dent. And we'll not be sitting here in 5 years' time going, oh, that's just the way it is. Because that's the current reaction to global money laundering. It's just, there's nothing we can do about it. It's too big. It's too unstoppable. I think with crypto, it's the cheesy Spider-Man quote, with great power becomes great responsibility. I think that because all of the component parts are there to stop things before they become a runaway train, that's why we're sort of seeing that if we can play our small part in the ecosystem and work with partners like yourselves and say, well, how can we join the dots and make this interpretable and can we actually deploy all of this knowledge in bite-sized educational sort of ways that people can act on it, then we'll be doing our job.
It's an amazingly good point to end the podcast on, is the opportunity exists here to do things differently than have been done before, make a big impact on the world.
The art of the possible.
That's right. Thanks so much for joining us on the podcast.
No, thank you for the invitation. It was good fun.
Yeah, thank you. Thanks for listening to this episode of Public Key. We're releasing new episodes weekly, so if you liked what you heard, then don't forget, subscribe, review, and of course, share with your friends. Did this crypto seizure episode pique your interest? Recent reports from Bloomberg News highlight that the U.S. Marshals Service held 22 cryptocurrencies valued at $919 million in December of 2021. In February of 2022, the U.S. made its largest financial seizure ever, about $3.6 billion in Bitcoin stolen during a 2016 hack of a well-known international cryptocurrency exchange. And cryptocurrencies made up over 90% of the assets confiscated by the Internal Revenue Service Criminal Investigation Division in the fiscal year that ended September 30th, 2021. Last thing before you go, if you're listening, then you probably liked learning about crypto. Have you signed up for Chainalysis Academy yet? If not, grab the link in the show notes and get your free account and start your journey today.